Well, this one was another good report really from Okta. It was up quite a bit on the back of it. It actually did better than Salesforce at the close, but I'll give you some rundown of their stats. So this was their Q4, so it was the end of their full year 23. So revenue was 510 million, and that's up 33%, of which subscription revenue, so recurring revenue, was 495 million. That's up 34%. Remaining performance obligations of about 3 billion. That's up 12%. Non-GAAP gross margin, Steve, of 78.9%. Non-GAAP op margin of about 9%. This is when they were subbing off stock-based comp again. Dollar-based net retention rate, we like that one, 120%. That means that their customers are spending essentially an extra 20% on top of what they spent the year before. Free cash flow margin, Steve, of 14.1%. That's the highest it's ever been. They do Rule of 40 for you as well, so you can see that. So that's revenue growth and free cash flow margin. That's 46% at the moment, but that's actually fell 16 percentage points. Total customers was 17,600, up 17%, and customers spending over £100,000 with them was up 27% to 3,930. So revenue, Steve, for them has grown about 37% CAGR over the last 3 years. Looks a pretty strong business to me. Free cash flow margin's gone from about negative 5.3 a couple of quarters ago to 14.1%. This is another one of those companies, Steve, that's sort of turning the screw on profitability. You're starting to see cash on the bottom line. They're even trying to get a bit of sort of net profitability. The guidance was to grow by about another 17% year on year. Felt a little bit sandbagged to me. And EPS, they guided for about 30 cents. Again, non-GAAP, but it was about 21 cents more than Wall Street were expecting. Looks pretty good to me. I think Chris Hill told us when he was on the show that he bought this one pretty much at the top. It's nowhere near getting back to the top, but it looks a lot better than it did a few months ago.
Yeah, and that gives him a chance to keep buying it, right? If he bought at the top, someone had to buy it at the top, right? No reason it shouldn't be Chris Hill particularly. So growth of 17% going forward, that seems quite a bit less than the sort of 33%. You said they were getting 120% dollar-based net retention here, right? So in a sense, it's kind of growing at that just sort of by pushing prices or adding on bits or something like that, right? So that to me feels like quite the slowdown. The market liked this very much for some reason. I can see you would like the past looking bit, but if I didn't know better, that guidance would be kind of off-putting to me.
Yeah, and the reason is because I think a lot of tech companies are doing headcount reduction now, and that is where Okta's breakfast is, isn't it? Is where all of the tech workers, all the identity software, basically doing identity software for those sorts of companies. So I think they're expecting a slowdown in headcount, and probably the dollar-based net retention. I would expect that to go with it. I think this is I would call this a fair weather economy stock, but actually still performing pretty well. I think the reason it went up so much is because it had fallen so much over the last couple of, at least the last couple of quarters. I mean, I'm just looking at the year to date now. It was 180 at its high point, and it fell 70.72%. So I think the thing here is that it's not falling. It's not collapsing in terms of a business as much as the market expected. So it's been on a steady climb from its lows, which was around the November time. It's up 90.33% from there, but obviously when you fall 70 and go up 90, that's nowhere near where you was before. Interesting one to me, Steve, though. Is it one of the stock? You've used this stock before, I believe, so is this one of the ones that interests you?
I haven't do, and I feel the same way I feel about Salesforce, to be honest. I think it's pretty good. I feel like there's stuff to come here. There's a big gap between those gross margins and those op margins at the moment. So basically 79 in terms of gross margin and 9% in op margin. Just remind me where all that's going for the time being.
It's pretty much all going in sales, marketing, and stock-based comp, essentially.
that's kind of interesting, I guess. So it'd be interesting to try and model a bit further forward. You said earnings per share were about 30 cents.
That's what they're
guiding.
thinking,
Sorry,
yeah.
guiding. 30 cents.
Yeah, guiding for it.
So okay, if you think that's what a 9% up margin looks like, you can sort of triple that to get your way to 90. It still leaves you fairly expensive, but growing at sort of 17% becomes interesting if you think it can hold on to that position, and it kind of looks like it can. There's some decent strength here, right?
Yeah, to me, this looks like an acquisition target for somebody.
Beat me to it. I was going to say, what's the market cap on this?
Yeah, I'm not sure what it is at the moment. When I bought it, it was under 10 billion because it's in the money incinerator. I'll just have a quick look.
Which does make it sound,
13.73 billion. So this is not a lot for people like Tom Bravo who've been going around and hoovering companies like this up. It's whether they'd be allowed to have that go through, because they've bought Ping recently, which is another identity software. So they perhaps wouldn't be allowed to get that through. But there's companies like Palo Alto, even maybe CrowdStrike might fancy it. Whether they've got the money to do a deal like that, or whether Okta would be interested in the shares. But I feel like we're due to have a big security company soon. And I think Okta would be one of the companies that would make it kind of into that big security company.